Rival investors, welcome to my channel. Adobe has recently made this acquisition of Figma. You know that Figma was an important competitor of Adobe, and one of the most important services that the company was offering to its users was the possibility for the designers, engineers, and creators to work in a collaborative way in real time. So this, of course, has been an important project taken by Adobe as well. But of course, Adobe wasn't successful in developing fully this project here. So of course, Adobe was not able to compete directly with Figma here. So the result of all of that was this acquisition here. Adobe ended up paying 22 billion for a company that will generate barely $400 million in revenues at the end of the year 2022. That means, of course, a multiple of more than 50 times sales here, which, of course, really the company Adobe has overpaid for this acquisition. But of course, there are different analysts or different YouTubers who are saying that the current stock market price of Adobe right now is really attractive, and they justify this acquisition of Figma because they say that Adobe has eliminated an important competitor and a long-term threat to the Adobe's business model for the future. So, of course, they justify this acquisition. But in this video, I will take another side because I don't agree that the current stock market price of Adobe, which is $280 per share, is attractive at all. So I will share with you my intrinsic value of this company, and I will offer to you a different perspective with respect to the acquisition of Figma. You know that if you are really an Adobe shareholder, it is like the management is taking out from your pockets 22 billion, and of course you would expect that this investment generates and deliver and decent profitability over the years. So you will be surprised about the numbers that you will see in this video here respect to that important matter here. So the first thing that I will do is to show you what are the different sources of revenues of the company Adobe, and then well I will present to you all the metrics of the company in order to know, in order to see how good the company has been performing in the last 10 years. Then I will share with you my perspective of the Figma's acquisition here, and you will see, of course, how much value this investment could generate for the Adobe shareholders. Then, well, I will share with you my intrinsic value using the discounted cash flow methodology here. I will share with you, of course, what are the assumptions that I've made to make this calculation. And the last part, I will share with you all the insights that I could get respect to this important acquisition by Adobe here. So I will start right now. Now, this is the breakdown in revenues here in which, well, we can see here the different sources of revenues of the company here. We have the subscription revenues here, which represent more than 90% of the total revenues. And you can notice here that the percentage of the subscription revenues has been increasing consistently over the years, which of course reinforce entirely the recurrence of its revenues, the recurrence of its free cash flow, which is something really good for the company to make better planification, to launch better long-term strategies, and so forth. Of course, this is something important for us as an investors because if the company has reinforced entirely throughout the years its subscription revenues, and this of course affecting in a positive way the free cash flow, of course we can make a better projection, better forecast in order to calculate intrinsic value of this company using the DCF, the discounted cash flow methodology, which is something good for us. It's one of the most important factors that contributes to make Adobe a really high quality company, really. Then, well, we have as part of the subscription revenues within the or inside the subscription revenues, we have the digital media, the digital experience, and the publishing and advertising here. And you may notice here that the digital media is the most important business line with the subscription revenues, with more than 75% of the total digital media revenues. And in this part, you may notice here that Figma was competing directly with the digital media business line of Adobe here. So you can imagine how concerned was the management with respect to this strong competition by Figma. The interest of the management, of course, was really high to make this acquisition of Figma here. And well, within the digital media, you can notice here that there is the creative cloud, the document cloud here. In general, in this part, the digital media here, we can find different products like Illustrator, Photoshop, Adobe Premiere, and so on. So these kind of products are pretty well known by many active users at a global level, really. Now, in terms of the breakdown by country here, you can notice here that it is not a surprise that the total revenues, that the company really well exposed to the US here, with almost 60% of the total revenues of the company that comes directly from the US. Then we have the Europe and Middle East with 26%, and we have then the Asia Pacific with only 16% here. Now, these are the metrics of Adobe system here from the year 2012 to the year 2021 here. And well, the first thing that I want to share with you is how the company was growing over the years here in the last 6 years here with more than 20% in several years here, which indicates, of course, that the company has been performing pretty well here. And not only the company was growing well, but also the company was increasing its free cash flow over the years here from, for example, in the year 2013, 14, 22, 27% until the year 2020, 21 with more than 40% of free cash flow margins here. So really, this is a really clear indication really that the company has doing really well, reinforcing its market position over these years. And probably one of the most important factors behind all these metrics here is how the company was increasing the participation of its subscription revenues, as I've just shown to you in the previous table, with respect to the breakdown in revenues of the company. Now, with jointly with these good metrics, really, the company was generating really solid and really good return of equity over the years, and return of invested capital as well here. So that clearly indicates that whenever the company reinvests into its own business to reinforce most of the products and software that are delivered to the users, increasing the added value services and so forth, the company is able to generate this kind of increasing return of equity and increasing return of invested capital over the years. What happened in the years 2013, 2014, and 2015 here is basically, well, the company really has performed poorly in these 3 years, and this is because the company was working so hard to make this transition toward the subscription model. Because before the subscription model, the company only collected fees by license here. So that means that the company only collected a one-off payments by each of its users. But then after making this transition, of course, the company needed to convince its users to make periodic payments for all of these softwares that the company was offering. But then of course, after these 3 years of hard work to convince them, the company was able to reinforce its market position over the years, generating higher return of invested capital over the years, higher free cash flow margins, and solid growth in revenues over the years. With this kind of return of equity and return of invested capital, it is not a surprise that the company do not make dividend payments here. And this is because, well, you know that Adobe really likes to think in the very long term, and they want to serve well the interests of its shareholders. And the best way to do that is that take advantage of this higher return of invested capital. Reinvesting most of the free cash flow generated by the company into its core business instead of making dividend payments. Generally, when the company do not get or do not earn higher return of invested capital, well, the company preferred to make more dividend payments. And in this case, of course, this is because, of course, the when you have this combination of higher return of invested capital and higher growth in revenues, well, it would be best for the stock market appreciation over the long term of the company to make this kind of policy of not paying dividend payments to make more reinvestment into its own business here. In the case of the balance sheet, it shows that it's really solid, because if you divide, for example, the long-term debt by the free cash flow, you may notice here that in less than 1 year, the total or the long-term debt can be paid back using only the free cash flow of the company. So really, this is something that has been I mean, the company has been consistent in this matter here over the year, which indicates clearly that the company do not need so much debt here. Well, as a result of all these growth, consistent growth in sales, consistent free cash flow generation, free cash flow margins here, and of course the reinforce of its subscription model, you have that this free cash flow has been growing stable and predictable over the years here. Okay, so this is something that the company has made really good in the last 10 years here. Given the result of all these metrics, it is not a surprise why the market really was willing to pay higher multiples for this company over the price over free cash flow indicates that this is a high multiple really. And something important to notice is how the company really was delivering value here because, well, the company was generating higher free cash flow, but this free cash flow was not used at all to make dividend payments here, as I told you before. But of course, the company used most of this free cash flow to reinvest into its own business and, of course, to make more repurchases here. Look at this, that the company was really consistent in this policy in the last 10 years. And the indication of this is that, for example, in the case of the repurchase of free cash flow, well, the percentage has been rather really predictable here over the years. So clearly that consistency in this policy indicates that the company was making repurchases of its own shares when the stock market price of the company was at its peak and when the stock market price of the company was at its lowest point, which indicates that the company was acquiring its own shares over the years at an average price, which is something really good from a long-term perspective, really. Which the thing that I don't like is when I see a company that truly in all just a few years the company just make these kind of policies of repurchases, particularly when the stock market price is at its peak, which was the case, for example, of ASML that that I developed in a previous video that you can watch in this channel. Okay, now and but in this case, this is something that, of course, that was this is something really consistent and predictable here, and this is something good for the shareholders in general. Now, something happened really in this year, in the year 2022 here, which is something really that is really worth noting here because not all the things could be perfect in a company here. So apparently, the company is facing a difficult stage here of deceleration here. And look at this in the case of the results of the company here. For example, in the last, according to the last quarterly result, which was the third quarterly result of the company accumulated here, the 9 months ended September 2022. Well, the company only shown just a 12% of growth in revenues here, and well, there was any sort of growth in net income here. In fact, the net income has declined a little bit. And of course, the diluted net income per share, which is one of the metrics that I like to see, well, it has increased basically because of the reduction of the number of outstanding shares as part of the repurchases policy of the company. But of course, something that we could notice is that the market started to be concerned about this potential deceleration of the company here. And well, you can see here that in general, for example, here in the Adobe's 4 quarter fiscal year targets here, well, the really market is not expecting something high really in terms, for example, of the digital media segment revenue. Just the market expect 10% of growth in digital experience, only 13%, in the digital experience subscription model, only 13%. Those are clear indications that the market are starting to expect a deceleration in growth in sales of this company. But apparently, the market was not so much concerned about that. Was concerned, but not so much. I think that the important thing that truly concerned the market was when there was an information about the acquisition of Figma that clearly indicates that the Adobe's management was desperate for future growth, which was, of course, something negative for the market. And that's why the stock market price of the company has declined something like 15, 16, or 70% in a day. So this is something that we will explore later here in this video. But look at this in the case of the consensus here. The company has done, I mean, has had a really an acceptable performance in the last quarter. For example, in the revenues, the company beat the consensus here. In the operating, in the adjusted EPS, the company beat consensus, and the cash flow from operation beat consensus here. The only things that in which the company can really miss is in the media revenues, in the operating margins, and in other metrics here. And in the case, for example, of the Adobe consensus for the last quarter of the year 2022, the consensus is expecting a miss here in revenues and is expecting a bit in EPS here. Okay, so really this is another important point that I wanted to share with you, because in this way we could understand why the market reacted in this way respect to the future performance of Adobe. And well, we will explore a little bit more about the Figma's acquisition in order to understand what is going on behind all this acquisition here. Now, in this part, I want to share with you what is my perspective or vision respect to the acquisition of Figma here. And we can see here through the numbers here. So I just wanted to make it really simple and easier for you to understand it. Now, for example, you know that there is not so much information about the Figma's financial statements here, because it is not a public company here. So, but we know that the company will deliver $400 million at the end of the year 2022, and we could assume, of course, that the free cash flow is just 10% of that total revenues here. So we're assuming that the company will be able to generate in the year 2022 $40 million here in free cash flow. Okay. Now, of course, we are talking about a really strong company that is growing faster and it's really profitable. So really, this is a really a conservative assumption with respect to the free cash flow. Now, we know as well that the price of acquisition of Figma here by the Adobe's management was the 22 billion here, which is comprised by 10 billion in cash, 10 billion in Adobe stock, and another 2 billion for, well, in cash to pay the compensation package of the Figma's employees here through the stock restricted units here. And well, the thing here is that with those simple numbers here, you can see here that the company, Adobe's management has paid more than 50 times sales and more than 500 times free cash flow, which is of course something really huge here. And this is one of the main reasons, or the main reason, why the market really punished Adobe in its stock market price. Now we will consider here two scenarios. The first scenario is when the Figma will not take advantage of the Adobe's resources and the company will be flat for the next 10 years. Look at this here. For the next 10 years, the company will only generate only 40 million for the next 10 years. And look at this, if we divide this free cash flow generated by the company per year, Figma, and we divide by the total investment that the management of Adobe has made, we could get an annual return of less than 1%, 0.18% per year, which is really poor, really poor. Okay, and we haven't recovered even the total investment here made by the Adobe's management here. Okay, but we will need to consider other kind of a scenario, more realistic here, and well, at the same time more optimistic here. Okay, look at this. If we consider that Figma will take advantage of Adobe's resources, Adobe's network, and its global presence, we will need to consider that there will be, of course, a growth in free cash flow here. And the thing is that I'm assuming that the company Figma will grow for the next 10 years 100%. This is, for, of course, an optimistic view of the future of Figma, because I mean, to sustain 100% of growth in free cash flow is really, really hard. I would say that, and even with this consideration, with this assumption, this investment of 22 billion is really poor. I'm not saying that the acquisition of Figma was not good, because I think this is something that nobody can deny, that really Figma really fit really well in the portfolio products of Adobe, really. So really, for me, Figma is a really good company. The only problem was the price paid by the management here. Okay, so look at this. If we take, for example, that Adobe will make Figma to grow at a 100%. Look at this. Our returns as Adobe shareholders. Look at this. The return of this investment will be poor until the year 2028. Okay, so, under these conditions, we will need to wait until the year 2028 to earn a decent return for that huge investment made by the Adobe's management here. Of course, this is something really dangerous, because we are assuming here that there won't be any problem here in all these years. There won't be any problem with the integration of the Figma products to the with the Adobe's products, and we are considering that all the things will be perfect for Figma within Adobe here. And adding to the fact that we are considering the 100% of growth in free cash flow of Figma here. Of course, under these conditions, you could expect that we could recover entirely the reinvestment made by the Adobe's management in the year 2031. But of course, for me, this is a very long term here for an investment of this type, really. So for me, this is a bad investment. Just look at this. How poor are the returns until the year 2028? We need to wait until the year 2028 to earn a decent return for this huge investment here. Okay, and even with that, we are considering a 100% of growth in free cash flow. What happened if the free cash flow of Figma grow at a 50%, which is something really high as well? Of course, things would be worse, even in this case, because look at these poor returns per year for our investment, for the investment of Adobe here. We will need to wait until the year 2031 to earn a decent 7% of return for that investment, and in the year 2032 we will need to wait for a return of 10, and we are not even recovering the entire investment made in the year 2022. So this is of course, that's one of the main reasons the market punish the Adobe stock in the stock markets in the stock markets just in one day, as soon as this information of the acquisition of Figma was released. Okay, now, something important to notice is how important is the price that you are paying for an acquisition here. Of course, you need to remember here that the worst enemy right now is not Figma anymore. Because yes, there are some bullish analysts who are saying that yes, Adobe is eliminating an important competitor in the market, because Figma could have represented a real long-term threat to Adobe. But right now, the worst enemy is the huge price paid for Adobe's management here. So what happened? What happened if we keep the assumptions of the 100% here, and for example, we could imagine that other kind of management would have negotiated this deal to only pay 2 billion here for this acquisition. So you can see here that even 2 billion is not so cheap, because we are talking about 50 times free cash flow here and 5 times sales of Figma here. But anyway, I would say that 2 billion is a better investment of the same company here, because look at this. We will need to wait only for the year 2024 to earn a decent return here. I mean, after the year 2024, we could earn a very good returns for that investment: 16% the year 2025, 32% the year 2026, and so forth until the year 2028, in which the company Adobe could recover its entire position, its entire investment made in the year 2022 here. So look at this, how important it is, the price that you are paying here. Okay, and now, of course, again, we are considering that the 100% of free cash flow is possible, of growth for Figma here in free cash flow. Look at this, what happened if the company Adobe is not able to make Figma to grow at 100%, only to 50%. So of course, the returns, annual returns of this investment would be of lower quality, but of course, still it could be something adequate here. Look at this. We will need to wait until the year 2025 to earn a 6% for that investment. 20 in the year 2026, 10%. In the year 2027, 15%. So really, even when this, I mean, when we are reducing the assumption of the growth here, we could see that at least with 2 billion we could earn. I mean, Adobe could earn for that investment a decent returns here just because of the lower price paid in this acquisition here. So it is important to understand these kind of things here because honestly, with an acquisition of 22 billion, things are completely different here. Look at this. We are not earning any sort of returns here, because 0.61% is nothing really. And of course, there is a huge cost of opportunity because with this 22 billion could have been used to reinvest in other available opportunities, buying other kind of assets here. But anyway, given the fact that the management really needed to make this acquisition in order to eliminate a really strong competitor as Figma that could represent a real long-term threat for the future of Adobe. Now, what is the implication of this? This is just a result. I think that the really Adobe has doing really well, as you have seen in the previous part about the metrics of this company, Adobe, that the company really has been performing well. But apparently, there has been some kind of complacency here. We really couldn't see this complacency in the last years, but apparently this complacency started in the last year, when Figma, of course, was growing and, of course, eroding part of the market share of Adobe, and was truly reinforcing its business model here, representing a real threat for Adobe here. So really, and you can imagine here that the management of Adobe went to the meeting with the founders of Figma. They went the Adobe's management went in a position of weakness here, whereas the case of the founders of Figma really went to the meeting in a position of strength. This is another important point here to understand, because the result of that weakness position of Adobe here, the result of that is the huge price paid by the company here. So it is not just the price paid by the management. It is, what does it really mean, really, this huge price here. So we need to be really cautious with respect to this these kind of things, really, because honestly, this acquisition revealed many things that we will see here in later in the last part in this video. But of course, something important to notice is that something that is inconceivable here is that a smaller company that, like Figma, with lower resources, smaller in size, and that was founded in the year 2012, how it was possible that a company like that could represent a real long-term threat for Adobe's business model, a company that has many years in the market, that has all the time to reinforce its market position and reinforce its business model and mode here. How it's possible that a relatively new company was able to disrupt the business model of Adobe? This is the kind of things, of course, that truly disappoint. I mean, after seeing this acquisition, uh, for me, I had the feeling that the mode and business model of Adobe was really stronger. But after this acquisition, things really change, and I'm sure that this is the perspective of the market change as well, and that's why the market really punish this company. Right now, we will see here what is the intrinsic value of Adobe, and how this situation really will influence in the price that I'm willing to pay for Adobe here. Well, in this part, I will calculate the intrinsic value of this company using certain assumptions here. So we will use here the DCF, the discounted cash flow methodology here. And well, according to all the information that we know about Adobe, we will need to make projections here. So the first thing that I will consider here is the outstanding number of shares. I will assume that this outstanding number of shares will be the same for the following years. Okay. In the case of the free cash flow margins here, free cash flow for revenues, I will consider 35% here. Look at this in the metrics here. If we remember, the company Adobe was able to deliver this kind of free cash flow margins here from 27, 26% until reaching 41 and 43% in the last 2 years, which is really high. But honestly, with the acquisition of Figma, here we need to consider that the capacity of Figma to deliver a higher proportion of free cash flow will be lower than Adobe here. Okay, so and of course this is just an assumption of mine, but I need to be really conservative in our calculation of these kind of projections here. Okay. So I will consider 35% and adding to the fact that, of course, I'm considering that this free cash flow margin will be used for all these years here for the following years. So we need to be considered, we need, of course, to incorporate certain things like higher interest expenses by Adobe, because you need to remember that part of the 22 billion of acquisition will be made in with debt here. So 10 billion will be paid through debt. So there will be, of course, a higher interest expenses here that the company will need to assume here or need to afford. Adding to the fact that there could be, of course, certain costs of integration and, of course, the lower capacity of free cash flow generation by Figma respect to Adobe here. So there are many things that we could consider that could make, of course, that these free cash flow margins could be lower here. Okay, so I would prefer, of course, to be conservative and to just consider 35% here. Okay, in terms of the sales growth here, you know that something that I read respect to the guidance by the management of Adobe, they say that they could expect something like 18% from the following years. But honestly, I'm not sold about that. In fact, you need to remember that in the last quarterly results of Adobe accumulated as of September 2022, the company was growing only 12% year over year. So I would prefer to stick to 12% in order to be more conservative in my projections respect to this company. So if we have, for example, here for the year 2021, these revenues, we could estimate here, and well, we are just forecasting these revenues using this 12% of guidance, and then we will need to multiply each of these revenues by this factor, the free cash flow margin here that we are estimating here. Okay. In this way, we are assuming this free cash flow estimated here. Now, the thing is that we are, of course, as part of this model, the model assumes that the growth in free cash flow is the same as the growth in revenues here. Well, this is something that will not damage our assumptions at all. Okay, and given the fact that in the last 6 years, the company Adobe was able to deliver a growth in free cash flow of 25% compound annual growth rate here. Okay, now our estimation is just 12% for the next years. Okay, now in the year 2027, and this is just because we need to make an estimation of the perpetuity, which is the present value of all these sequence here from the future for the very long term. Well, I'm just taking here the first term of this sequence in the year 2027, and I'm assuming just a 3% of growth here in free cash flow with respect to the year 2026 here. And then, well, I will take this first number from all this sequence to calculate the present value of all this sequence here, which is the perpetuity. And we are taking this number divided by the discounted rate, which for me, right now, and with this condition how high quality this company is, I'm taking this 9% and minus 3%. This 3% is the growth that I'm assuming for the future growth in free cash flow after the year 2027. Okay, some analysts are estimating or considering 5% for this growth here of the perpetuity, and I'm just considering just 3% here. Okay, the thing is that, well, we will need to calculate the present value of this present value here. So in order to do that, we will need to take this number and divide by 1 plus the discounted rate, I mean the cost of opportunity, and an exponent 5 because we have a difference of 5 years here. Okay. And then, well, we calculate the present value of all these free cash flow here from the year 2022 to the year 2026 here. Okay. And well, we have this important part of the enterprise value. So we will need to sum this present value of all this free cash flow. But we will need to add the cash that the company has in its balance sheet as of September 2022 here. And we will need to subtract the total debt of the company, because this is of course, those are amount of money that do not belong to the company really. So we are taking here the long-term debt plus the short-term debt. I'm not considering here the 22 billion of acquisition, all the amount of money paid by the Adobe's management here to make the acquisition of Figma here. Now, of course, I know that from this 22 billion, only 10 billion will be paid in cash. The other 10 billion will be paid through Adobe stock, and there will be other 2 billion for the payment of the compensation package of the Figma's employees here as part of the deal. Okay, but given the fact that I don't want to make any sort of complications here, and I know that anyway this 22 billion will be got out from the pockets of Adobe shareholders, so I will prefer to use all that 22 billion as if it were a total debt here, and in that way I'm subtracting from the total value generated by the present value of the free cash flow from the future. Okay, so really, when we are calculating the enterprise value, I'm just summing all the perpetuity, which is all the free cash flow from the future estimated here, and we are adding all the cash on hand in the balance sheet of the company, and we are subtracting all the total debt here, including the 22 billion of the acquisition here. Okay. Now, once we have this enterprise value, we will just divide this enterprise value by the total outstanding shares here. So this is something very convenient for us, because you know that it would be more complicated to consider that all these outstanding shares will be reduced year over year for the future. So we will need to so this with this situation of including the 22 billion as part of the total debt, we are eliminating the fact that we're avoiding to make the operations more complicated here. Okay. Anyway, these 22 billion need to be subtracted for all the value that the company will generate in the future anyway. So the intrinsic value per share will be $241 per share. And even the fact that I like to add a more margin of safety of 30%, the price that I'm willing to pay would be something like $169 per share here. Okay. Now, this is under these conditions here, because it is up to you. For example, if you consider, you need to remember that the growth in revenues of this company has been really good in the last 6 years, 7 years, in several years, more than 20% here. But we need to consider here that we are getting into a scenario that is more difficult for many companies here, in which the consumption could be reduced in the following years. So we don't know, of course, how the company will be able to deliver a 20% of annual growth in sales. Even when this management is considering 18%, well, I don't feel so much convinced about that guidance here. So I prefer to stick 12% here in order to be more conservative. And given the fact that, of course, something that after seeing this transaction of Figma here, it reveals, of course, that the company was desperate for growth. So that make me think that there could be more difficulties, or the next scenario, the next years could be really challenging for a company like Adobe. So I need to be really conservative in my estimations for to calculate the intrinsic value of this company. Anyway, if you consider, for example, that the growth in sales could be 15%, well, your intrinsic value per share could reach the $279 per share. But even with that, you know that the current stock market price of the company right now is something like $280, $290 per share. So really, right now, according to my humble view, the stock market price of the Adobe is not attractive at all. I would expect a further decline of the stock market price of this company. Okay, so this is of course, this is totally, I mean, this is the opposite of what some analysts, some bullish analysts are saying, or some YouTubers are saying, respect to Adobe right now, that they are expecting, for example, an intrinsic value of a company of something like $380 per share, $480 per share. I think that though all those intrinsic values or target prices are not feasible at all for this company right now. Okay, because most likely they are considering really higher growth in sales, and I don't know if the company Adobe, even when it has made this acquisition of Figma, I don't know honestly if the company will be able to deliver this kind of growth as it was in the past. So for me, I would stick to 12% here, and I will be extremely conservative in my calculation. So I would expect a further decline of the stock market price of Adobe in the future, in the following, in the next months here. Um, so this is important to notice here about the calculation of the intrinsic value here, because honestly, I mean, I have a certain negative sentiment respect to this company. I'm not saying that the acquisition of Figma was not good. I think that Figma is really a good acquisition, and of course, the business model of Figma could fit really well with the business model of Adobe. But the only thing is that the price paid for this acquisition was extremely high, really, which reveals, of course, that the company was desperate for growth, and of course there has been some kind of complacency that I'm noticing in this company right now. So, and after making this acquisition, well, what is the sort of things that right now the management of Adobe are thinking? For example, that they could make future acquisition like this one, overpaying for those acquisitions whenever appear a new challenger, a new startup that could represent a real long-term threat for the company. So this is the kind of things, of course, that I don't like, because these acquisitions with huge prices paid can really destroy value for the long term for the Adobe shareholders. So I need to consider all these things really when I'm considering the calculation of the intrinsic value, particularly if we are thinking to hold this company for the next 10 years, for the next 15 years here. Now, in this part, I want to share with you certain insight respect to the risk of Adobe and insight respect to the acquisition made by Adobe respect to Figma here. So the first thing is that, well, paying 50 times Figma sales means that Adobe had a real challenge competing with Figma here. So this is important because I think that, and in my perspective, this acquisition, these 50 times sales of price here made by Adobe is the result of that there was something wrong, or certain flaws in the long-term strategy of Adobe here. Really, this clearly indicates that Adobe was in a position of weakness in the negotiations in this deal here. Okay, now something that is inconceivable is that a company like Adobe, with a well-established brand that has worked and has reinforced its business model in the last 20 years, how is possible that a smaller company with smaller resources was able to represent a real long-term threat for Adobe's business model? This is the kind of thing that I don't understand. So that's why I say that there was something wrong in the long-term strategy of Adobe here. Okay, so basically, what I'm saying is that, I mean, it is undeniable that Adobe needed to make this acquisition, because if Adobe didn't make it, it could have represented a real long-term threat, and a short-term threat, of course, for Adobe's business model, which of course could have been really bad for the company. Now, but what I think is that these 50 times sales reveal that this is the result of something wrong in the long-term strategy of the company. I listen that there are certain YouTube channels or certain analysts who feel really satisfied with this acquisition of Adobe, because they think that Adobe has reinforced its business model, paying this huge price, even when they recognize that the price paid was huge. But something, of course, for me, yeah, I mean, I am taking the contrary side here, because what I think is that Adobe's management, I mean, has certain complacency behavior, which is not something good for Adobe shareholders in the long term. And the thing is that with this acquisition, of course, the behavior of the management has been reinforced with this complacency here. So What do you think that the management of Adobe is thinking for, if, for example, in the next years, there could be new startups, new companies that could represent a real long-term threat for Adobe? Well, the thing is that they will not reinforce its strategy here. The only thing that they will do is to make an acquisition, overpaying for future potential subsidiaries here. So this is the kind of things that I don't like, and this is the kind of things that reveal certain weaknesses in the strategy of Adobe here. And you may understand that the market reacted here and with a negative sentiment respect to Adobe once this information of the acquisition was released. Okay, so I'm trying to explain this. And another important point is that most YouTube channels or other analysts are trying to rationalize this acquisition with this huge price paid. And this is the same mistake of the management, because the management has and according to what I listened from them in the last quarterly reports of Adobe, they are trying to rationalize this huge price paid, really saying that, of course, that Figma could be really a good fit for Adobe's ecosystem. And I think that really Figma could fit well and could deliver value for Adobe here, or for Adobe shareholders. But the only thing here, the worst enemy right now, is the huge price paid, as I demonstrated to you in my spreadsheet in Excel. Now, another important point is that Figma could threat the Microsoft Adobe partnership. Well, you need to know, you need to remember that this Adobe has had a really a long-term partnership with Microsoft, and it was extremely benefited from this partnership here. So in the last years, in the last 20 years, this company Adobe, I mean, most of the growth delivered by the company was thanks to this long-term partnership with Microsoft here. So it is something important. But something that you need to notice is that Figma, the products of Figma were used by the Microsoft employees, and they were really happy using them. So of course, if Figma was not acquired by Adobe, of course, I mean, there could have been some kind of pressure to the toward the management of Microsoft to break this deal, to break this partnership with Adobe, and instead of that, establish a new relationship with Figma here. So that could be, of course, something really catastrophic for Adobe. So you can here see that the Adobe was attacked in several fronts here, and the management did not have so many options. The only option was to make this acquisition regardless of the price that they are paying for that acquisition. So in the case of in this third point, well, why did not Adobe develop its own products to compete with Figma instead of buying it? Well, this is the question that I had once I read respect to this acquisition here. So how it's possible that a company with an smaller resources, that a company like Figma that was founded in the year 2012 could represent this really a strong challenger of the market position of Adobe? This is something that is inconceivable here. So that's why I say that there are certain flaws in the strategy of Adobe, or probably as I mentioned before, there have been certain kind of complacency in the behavior of the management, and of course this complacency in its behavior could have been reinforced by the acquisition of Figma here, because they think that in the future they will overpay again for potential subsidiaries, for potential disruptors here. Okay, and this is something, of course, that I mean, when you overpay for an acquisition, most likely you will destroy value for Adobe shareholders. Then, well, look at this. In the case of the another point, interesting point is that after seeing this acquisition of Figma, the venture capitals could. I mean, they could promote more the new businesses to challenge Adobe's mode. You know that the venture capital, I mean, these are funds that promote and focus in the startups, and they could reorient their efforts to promote more this startup that could compete and that could represent a real long-term threat for Adobe. So there are strong incentives here, because they already know that Adobe is willing to pay huge prices for any potential future disruptor from its business model here. Okay. Another interesting point is the goodwill here. You know that the goodwill is the difference between the price paid in the acquisition minus the net identified assets here. Okay. Now, in this case, if you overpay for an acquisition, you will put so much goodwill in your balance sheet here. in the case, for example, of Adobe, I estimate that this could be something like 19 billion, because I estimate that the company Figma could have something like 2 or 3 billion in net identified asset. This is something just an approach. So you can imagine 19 billion of goodwill here. Now, what is the problem with this goodwill? Well, the thing is that this goodwill is reviewed year over year in order to compare the delivery of value that it was assumed at the beginning of the transaction here. So if there are so much difference between the assumption and the reality, of course, that could represent a real breakdown, which are considering expenses here that need to be included, that will be included as part of the income statement. And of course, these expenses, of course, will tend to reduce the net income in the future or in the foreseeable future. So this is another important factor that could affect the value of the Adobe shareholders in the foreseeable future, or in the next 5 years, or in the next 10 years. Now, in terms of the Sketch here, you know that Sketch is another important competitor here. Sketch could be the next Figma. Yes, it could be, but we need to take into account certain things here. Look at this. This is the chart here, a chart in which, well, it reveals the market share of different brands in the interface for designers and among the younger professionals. And in this important market, Figma had, of course, the leadership here in this important market. And Sketch was the second here. And Adobe, well, Adobe was represented here by Adobe XD, Adobe Illustrator, and Adobe Photoshop here. Okay, well, the thing is that Sketch is more oriented to the operating system of Apple here. So, and Figma is more oriented to the operating system of Microsoft here. So, but of course, I can't deny that the fact that Sketch is focused just in the operating system of Apple. It doesn't mean that in the next years Sketch could decide to compete in the operating system of Microsoft as well. So this is, of course, this could be, of course, a Sketch, a potential challenger in the future here. Okay, and we know that what do you think could happen if a Sketch really decide to get into the operating system of Microsoft? Well, you know that and if Adobe feels that Sketch is a real long-term threat, of course, Adobe, with this behavior of complacency, will be willing to overpay for this acquisition. This is, of course, that the market has considered here in the future prospects of Adobe here, that there will be some kind of tendency to destroy value by the company here. Okay, but there are, of course, other smaller competitors like InVision Studio, Azure, Framer, UXPing, and so forth. But well, these competitors will not represent a real long-term threat for the future of Adobe here, particularly after making this acquisition of Figma. But of course, in the long term, they could be reinforced. They could have all the incentives to develop their market position, to develop their products, to develop their stickiness, and so forth. So it is important to consider these kind of things here in order to understand why the market is punishing Adobe's here. In the last point, I would say that, well, there are some YouTube channels or some analysts who are saying that this is something. I mean, the acquisition of Figma by Adobe is something similar, like in the case of YouTube and Google here. But there are different things here to consider, because that, in my opinion, is that we are not talking about similar transactions here. So in the year 2006 or 2007, Google was a relatively new company, that could not, I mean, that was not able to develop a product to compete directly with YouTube. So that's why they had all the incentives to overpay for YouTube. And of course, YouTube has been really, really successful over the years, paying 1.65 billion here. So, but of course, I don't have any doubt that Figma will be successful for Adobe here. The problem is that it is not possible that a company like Adobe, which is supposed that the company has developed or has had or is having a solid brand over the years. I mean, we are not talking about the same situation here, because it was supposed that Adobe was the leader in the in its industry with an undefeatable business mode here. In that time, in the year 2006, 2007, Google was relatively new, so it made sense for a company like Google to acquire YouTube here if they have the funds to buy this important company here. But in the case of Adobe, it is supposed that Adobe has had a really well-established brand here over the years. So it is inconceivable that a company like Adobe was not able to compete directly with Figma here, or at least paying less than 50 times. I mean, for me, a good acquisition could have it something like, I don't know, 2 billion, 3 billion at most, not 22 billion for this company. But it was clear, of course, it revealed, of course, as I mentioned before, that Adobe is experiencing certain kind of complacency in the behavior of its management, and this is something, of course, that I don't like for the future. Adding to the fact that, of course, in the case of YouTube, with this acquisition of 1.65 billion, it represented something less than 2% of the total market capitalization of Google here. Whereas in the case of Adobe, with the acquisition of Figma, with this transaction, the transaction of Figma, or the price paid by Adobe's management, represented something like 15 or 60%, 16% of the total market cap of Adobe, which indicates, of course, I mean, how weak the company Adobe felt respect to this acquisition. It is like the management was really desperate to make this acquisition because they felt that they were attacked by many fronts here, and the only option that they had is to make this acquisition overpaying for it. And as I told you before, this is because it is most likely that there was certain kind of flaws in the long-term strategy of Adobe. And of course, I could have expected something like that the management would say in the last quarterly reports that they are trying to solve the different flaws or problems that they could have respect to this acquisition. Because, of course, as I mentioned before, and I don't feel tired to mention again and repeating again, this acquisition was only the result of some kind of flaw in the long-term strategy of the company. I mean, I feel that the management is not being honest with the Adobe shareholders, that they have made certain mistakes in their strategy, in their capacity of innovation, and so forth. Because it is really hard to justify this acquisition, overpaying so much for this subsidiary here. So this is the kind of things, of course, that I really hope that you really have understood this position, because in this way you will understand why the market is punishing Adobe and its growth prospect. I think that the company Adobe will keep growing for the next 10 years at least. The only problem is that the company could face this kind of deceleration even with the acquisition of Figma here. And the last point, well, this is the question that I had when I saw this when I read about this information of the acquisition of Figma. What does the company is doing to reduce the chance of being disrupted here? Because I didn't listen anything about from the management that they are focusing their energy to reinforce the strategy or the intangibles of the company to avoid potential future disruptions here and avoid this kind of overpayments for future subsidiaries here. So this is, of course, something that make me feel that there is some kind of complacency. There's no that the company has right now some kind of complacency here, and this last acquisition has reinforced this behavior of the management, and that's why this is, of course, this is a behavior that is not that is so far away from the ownership behavior that I'm expecting from a company like Adobe here. Me as a value investor, I'm expecting that the management really has a behavior of ownership of the company. Okay, so this is not the behavior that I'm seeing right now with this acquisition. And of course, I don't see that they are recognizing or acknowledging different kind of mistakes that they have made that ended up with with a transaction of or acquisition of more than 50 times sales. So really, this is my vision respect to the Adobe here. So as you have seen, really, Adobe is a high quality company, but unfortunately, the only problem that the company has is the recent acquisition of Figma. And even if you think that this acquisition is really good because Figma is a high quality company that could fit well in the Adobe's ecosystem, really. But the problem is the huge price paid. And I, as I have demonstrated to you in this video in the spreadsheet in Excel, how bad this investment is when you are overpaying for an acquisition, because it should be seen as an investment. Because in the end, if you are a Adobe shareholder, you need to consider that the management, it is like the management is taking out 22 billion from your pockets to invest, to make an investment, and you would expect, of course, a decent return for that investment in the long term. So this is the kind of things that really call my attention with respect to this situation of the Figma's acquisition. And of course, it reveals, of course, certain weaknesses in the strategy of Adobe here, because I'm not saying that the acquisition of Figma is something wrong. No, this is a good decision, but this is the only option that the company Adobe had in order to reinforce its business model and reinforce its moat here. But apparently, these flaws in the strategies just make Adobe to reach this point in which there's no any other option for Adobe except the acquisition of Figma. So this is the kind of thing that I want to think about it. Not necessarily because there are some YouTube channels or some analysts who are saying that the current stock market price of the company is attractive. That doesn't mean that, of course, the current stock market price really is attractive, because as I have demonstrated to you, really, I would expect a further decline in the stock market price of this company. So really, with this acquisition, it reveals certain complacency in the behavior of the management, and this is the kind of things that I don't like, because for me, this kind of behavior is so far from the ownership behavior that I'm expecting for a company like Adobe. This is the kind of things that we need to detect, because we are like a detectives, really, in order to see that this, if the orientation of the management has changed over the time. This is important, because this is what really will create value in the shareholders, not only the company but also how the management is thinking. So this kind of complacency in the behavior of the management has been reinforced with this acquisition of Figma, because now they think that in the future, whenever any new startup could represent a real long-term threat for Adobe, the management of Adobe will make this kind of acquisition, overpaying for all of them. And this is the feeling that I have respect to this company. And another important point is that, for me, as I told you before, Adobe is a high quality company that will keep growing in the next year. But what I would expect is that deceleration in its growth, even with the acquisition of Figma here. Probably, well, this is just because of this complacency and the behavior of the management. And something really important to note is that the management really, I really expected that the management has acknowledged the fact that they made mistakes in the strategy, and this is something that I didn't listen from them in the last quarter results. They were just trying to rationalize this huge price paid for Figma. So this is, of course, a mistake here, which is something that is commonly mentioned by Warren Buffett in his letter for his shareholders, that the most of the time, whenever a management is paying a huge price for an acquisition, they will try to rationalize in order to convince themselves that they are doing really well. But this is not clearly the case here. So in this video, you have discovered if there are some problems, these problems could not be seen directly from the metrics of the company. So in this video, I'm trying to help you to determine that there are two different things that we need to consider here, particularly if we are long-term investors here. It really matters how the management is thinking, and of course, if the behavior of the management is really shareholder oriented. And apparently, in this case, I think that the behavior of the management is taking another step of the shareholder orientation that this kind of management should have. I hope that you really have enjoyed this video. Please put a like if you consider this is a video that is adding value to your investment knowledge. Consider to subscribe if you think that this channel could add value to your investment knowledge. I will continuously delivering more and more information about different companies, different concepts, always since the value investing philosophy point of view. So I hope to see you in the next video. Peace.